we do this market update every seminar. There's a couple of numbers that I want to zero in on. I usually zero in on these numbers all the time anyways, but so let's look at total sales first of all for July, which is we're 3/4 of the way through July. So it's a good number to look at. It'll probably be pretty consistent towards the end of July as well. Sales are still starting to fall. And we realized this a couple of months ago. Once our prices got so high and interest rates were high, and inflation started to affect everybody's spending, we knew that the number of sales, the sales volume would start to fall. And we're seeing that. And so far, compared to July of last year, we're almost 13% down in sales. We figured that would happen. Corresponding to that is the active listings. As sales are falling, more and more people are putting houses on the market. The active listings are going up, and this is a good thing for investors. And you see it's up 16.43% over last July. It's a good thing because investors don't really want to get into a bidding war with other people or emotional buyers. Investors are typically cheap. We want to get these houses at the lowest prices we possibly can. So more and more inventory is a very, very good thing. And the final thing I'm going to zero in on before, as I can talk about a few things, is the average price. We're still seeing it go up. It's up 11, almost 12% year over year compared to July of last year, which is still a very, very healthy increase. But if you look at the price, the average price for July so far, it's over $600,000. It's 604. We still feel it has a ways to go because we're still less than half of the average price in Vancouver and Toronto.
Yeah, and that's the key point there. People always ask us, well, have I missed the boat? Investors always feel, Tim, they've missed the boat. We always say this, the deal of a lifetime comes around just about every week. So we can find cash flowing properties, no problem at all in this market. Yes, some of our investors have to get creative. And we always say this, if you've read our book, Fearless Real Estate, if you're not cash flowing, you're not trying. So we're not even worried about interest rates. We're not even worried about where the market is right now. We actually believe the market, we were saying, should have been by this time, Tim, at around 650,000.
Yeah.
We've had to move the goalposts now, and we feel the average in Calgary should be around 750,000. So we have a long way to go. And how are we so optimistic on this? Tim, we'll get into the next slide and tell people what's going on here.
Yeah, so when we're talking about some huge price increases like that, this slide is pulled straight from Calgary Real Estate Board's quarterly update report after Q2. There's some very, very important numbers we want to look at. If we look at Alberta's population, we're almost at 5 million people, and that's like a 4.41% increase over last year. Interprovincial net migration, year over year, 12,482 people came from other provinces. But if you look at the international net migration year over year, 32,893 people came in from international destinations. So we're getting a huge influx of people, increasing our population, and every one of those people is increasing demand for housing in the province. And it's just crazy. Our housing starts, which are at the bottom of this graph, the amount that we're building, we're not keeping up with the population that's coming in.
And not only that, Tim, key factor which you were pointing out to me today was the amount of purpose-built rentals compared to properties for sale. So about 50% of properties being built, this is what everybody has to understand out there, is purpose-built rental properties. So they're not coming onto the market. So we have a severe inventory problem here in Calgary. And that's not going to change anytime soon because of this. I mean, inventory is going up slightly right now, and we just hit 3,000 listings. Our average in a good market for everybody out there is roughly 5,500 listings. And so we've got a long way to go to get there. But as Tim was saying, the market is cooling off a little bit because we've peaked. And when we say we've peaked, we're hitting max rental amounts. So tenants won't pay any more rents, we're seeing. So what that means is we actually cut it off. So as investment-focused real estate agents, we cut it off at a certain amount. So if we're bidding on a property, we can't go over a certain amount if the property's not going to cash flow. So then that takes us out of the market. And by doing that, Tim, more properties are coming on right now.
Yeah. So there's a comment in the chat here. It says, I see a lot of new development in Calgary. It feels like the market will be oversaturated and crash soon. Well, what we're reflecting on this slide here is you can see the number of units under construction and the number of units completed. But if you look at the top part of the slide, the influx of in-migration and people coming into the province is more than offsetting the amount that we're building. You can just look at the amount that the comparison at the very bottom here, year-to-date construction completion, we've got 4,886 rental units completed and only 600 or 6,720 ownership units. So that's more than 3/4 of the units that are being built in this city that have been completed so far this year have been rental only units.
Yeah.
So the population coming in is more than offsetting what we're building. Yeah, there's a lot of construction going on, but there's way more people coming in.
Yeah, and at the beginning of tonight's session, we talked about townhomes. That market can't catch up, Tim, and the semi-detached and the detached homes, it can't catch up because they're building further out, and not everybody wants to live that far out of town. I mean, it's not that far, but the newer community, there's new communities out there. I don't even know some of the names, Tim. Tim comes into the office and tells me there's new communities out there all the way in the deep south. But you know what? People want to live closer to downtown. So those markets are going to continue to thrive and it won't be saturated. And talk about saturation. For many years, we weren't investing in the condo market downtown behind us here because it was saturated. Now it's going to take 3 to 5 years for them to solve the inventory problem downtown. So there will be condos that are going to continue to go up. And we've seen on average, Tim, 1,000 square foot, 2-bedroom, 2-bathroom, say condos. We used to get them, Tim, under 300,000, no problem. Now we can't even get them under 350,000. So those prices, just because of inventory levels, will continue to go up as well.
Yeah, so looking at population and building starts going on, we feel that, Calgary's still in for a good run. We're not going to see massive price increases because we're at the top. Until we start to see interest rates come down a significant amount. And tomorrow, the Bank of Canada is going to have a rate announcement. Some people feel we're going to drop a 1/4 point. Some people feel we're going to stay the same. Even that drop of a 1/4 point will not affect demand that much. We need to see it go down 1.5 points. And that will take, the rest of the year, maybe into 2025 before that actually happens. Then we'll see demand really pick up again. But it's the affordability that people are feeling right now with inflation so high, and it's been so high for so many years. People don't have a whole lot of cash in their pockets anymore, and they're holding on to that as opposed to going on extra trips, buying extra homes. That's why you're seeing the number of sales start to drop.
Yeah.